Everybody, it's TheoTRADE chat. It's Don Kaufman here. It's March 6th, excuse me, 2024. Just about 3 minutes and 30 seconds to go to the cash open here on this Wednesday morning. Oh, spoos. Well, we're more than cutting some of the losses in half from yesterday. There is a huge amount of volatility, though, packed into today's trading session. Interestingly enough, we are right now, right there, we're on the daily expected move. So the daily expected move is like 31 bucks. That's a big daily expected move. So a lot of price action, obviously, to play out. Some of that Jerome Powell testimony, we'll talk about it, but his statement is already out, meaning that there's a kind of a prefabricated statement that comes out before Jerome Powell testifies. That's already out. It was out like an hour ago, and nothing really new. I mean, the market reacted a little bit mildly in here. We reacted like negligibly to ADP report. There is a big chunk of news, though, that comes in about 30 minutes. We'll talk about that after. Anyway, with that, let's get down to it here. So spoos are up some 33 handles. Actually, not really surprising to see the bounce back over here. What is a little surprising, though, is the size. There is 255,000 contracts trading right now. That's big. 250,000 contracts is more than we saw yesterday, and the S&Ps yesterday were down some 25 at the open. Also, the volume in the bonds is what I would term catastrophically large. I mean, you're almost doing 200,000 contracts in bonds. Take a look at the notes. Notes are clear up to 800,000 contracts. There's huge size out there. So I don't need to probably tell you this, but you look at the tape, what do you think is the driving force today? Once again, I mean, you look at the financials up nominally. The energy sector actually does have a bid under it. Energy's bid, oil's bid. You start looking around those, some of the usual suspects. You know that Microsoft is flat to kind of down just a tiny bit at the open. I just wanted to show you that because, the argument is, look, it's one stock that's driving the market. Yeah, no kidding. It is one stock driving the marketplace. So Nvidia is actually going to start off with a stellar bid to the marketplace. To one stock market, people. Tesla's actually down on the day. Meta also huge bid this morning, up by $7. Google relatively flat into the open. Amazon up maybe $1. Apple nowhere. It's up $1. It's nominal. So although you have a 35 handle move in the S&Ps, 30 seconds to go to the cash open, the advanced decline line is going to be positive. The ticks are going to be positive. This is one that, holy crap, we have to be careful. We have Catalyst this morning coming out. Of course, the JOLTS wholesale inventories. Holy crap, we have to be careful because I got to tell you, there's nothing else that's rallying but Nvidia. And if stuff does start to rally, things get crazy here. I'll explain after the cash open. So at the bell, as I was saying, the advanced decline line screaming out of the gate. That's actually pretty good. It's one of the best advanced decline lines we've seen in quite some time. But with all due respect, there's just not a lot of crap that's actually playing into it. The financials are up listlessly. So, Microsoft, 0.2%, doesn't even count. Tesla's actually flat on the day. The tick's going to be raging strong here, and they are. Right? Ticks are positive 1,300. All right. So, well, what are we going to wait for? Frankly, I'm not sure. Not sure we're going to be able to do much of anything right now until after the economic data breaks. So right off the bat, look, you're a minute into the trading session, and I'm already saying we already hit the move for the day as it relates to the S&Ps. Nasdaq is actually ripping right now, up 1%. And Nasdaq, though, got annihilated yesterday. Actually, if you take a look at the QQQ and go to auto expected moves, this is also pretty interesting. The Qs yesterday, I want to see if I can zoom into this. The Qs yesterday cracked well outside their expected move. They're inside of it today, but just north of that lower edge of expected move. I mean, again, this is where everybody's like the rally, back today is going to erase all the damage. There's no chance. There's a lot of damage inflicted yesterday inside of Nasdaq. The damage inside of the S&Ps to a lesser extent, nevertheless, just taking a look at expected move right now, we're more than halfway home. Okay, basically on Monday, we didn't really do much of anything. Tuesday, kind of a crap fest, rallied back to the lower edge of expected move. Here we are, just a bit better than halfway home to back to even on the week. The big question, obviously, today, though, is, the market's been moving on catalysts, and how much are some of these catalysts going to play a role? What I'm referencing here, by the way, that, 84, 85 stocks trading to the upside, it's a really heavily correlated state. Once again, we have not categorically seen that lately. Before I actually talk a little bit more about the market as a whole, it's time to actually take the temperature, if you will, of Nvidia this morning. Interesting. It's a wild child. Didn't expect it to be nearly this volatile this morning, and I didn't expect it because I think the marketplace is just going to hold up and wait for news to actually break. That would be in my anticipation. That does not seem to be the case. Nvidia is again really heated in the first few minutes of trade. And by the way, I'm not talking about the fact that it's up 17 bucks. Neither here nor there. What I'm talking about is the sheer magnitude of the moves. Bear with me here for 1 second. All right, better. maybe better. The sheer magnitude of the moves inside of Nvidia in the first 4 minutes of trade are huge by huge. I mean, you're seeing $6, $7, $8 moves inside of 1 minute. The volume in there is also, it's far more substantial than I would have anticipated at this point in the trading session. So that's obviously going to be one of the stocks to watch. I think the same is probably true, of course, of Meta. Has a bid back under it. Speaking of Meta, Meta is now unchanged after hitting the lower edge of an expected move yesterday. It's now unchanged in the week. Obviously, Nvidia wasn't down yesterday. Nvidia was up like 7 and change yesterday, cracking outside the upper edge of its expected move. And this stuff, rather critical, and I'll tell you why it's so critical. What concerns and what should concern you about Nvidia is, even for Nvidia, the number of breaches of expected move now total 3 in the last 3 weeks. Your 3 weeks back to back being outside the expected move. And really, looking back, you've got, just to kind of quantify this a little bit, I'll talk about how wild the move is. There's a breach. This one just hit. I would count this as a hit. There's a breach. This one, nothing. All right, that was a nothing week. Here's a breach. It's a hit. I mean, you're literally 1, 2, 3, 4, 5, 6, 7, 8. Okay, 8 out of the last 9 weeks hitting or exceeding the upper edge of an expected move. Is it a record in here? Man, pretty damn close. That rally though is I say long in the tooth, but the price action in here is just wild. Like I keep saying this, like if this thing doesn't calm down, it's going to end in a very hostile fashion. And it's not only isn't it calming down, it's actually getting more extreme. Here's a day where I think you can anticipate once again. We were looking at this over the last few days. There it is. Volatility is picking up again in Nvidia to the upside. Again, volatility picking up to the upside. Back to the main theme over here is the marketplace as a whole. Look, I don't think it moves much beyond the SPX expected move. And again, I want to make that clear when I'm talking about the SPX expected move. Okay, well, there's several expected moves, but the ones that we look at, okay, the SPX, okay, weekly expected move, which is about 64 bucks. Okay, and then there's an SPX daily expected move, and that one today is about, what is it, 31 and change? Okay, yeah, it was 31. It was basically 31 on the button. We stopped dead at that in the pre-market. That's the number to actually focus on. Okay, so S&Ps are coming in a little bit, but again, your whole marketplace, and I literally mean, here we go, tech is starting to see some sell side activity. The whole marketplace today is based on Nvidia, and you have a side order of Meta in there. And I just say that because Meta's not going to hold anything together. It's Nvidia, all day long. You do not have the financials. Okay, energy is bid. What do you have that's truly holding markets up some 26 handles? You have one freaking underlying. Don't tell me it's the financials because they're gone, right? Don't tell me it's Amazon because it's already seen some slippage, but 0.85%. Please, that's exactly in line with the Nasdaq. You got nothing. You got nothing in here today. And I know that again, people keep bringing up like some of the smaller market caps. Okay, they're inconsequential. They're just, when Nvidia moves by 2%, all you have to do is do some simple math. What's 2% of a $2 trillion company? Speaking of a $2 trillion company, it's $2.2 trillion at this point. When you think about like 2% though, of a $2 trillion company, you do realize like super micro computers, it's kind of an afterthought. I saw somebody actually asking, we talk about super microcomputers, bring that up for a second. I say this is kind of an afterthought, like I'm not joking here. It's only $64 billion company, right? So when we're talking about, 2%, 2% of a $2 trillion company kind of makes $64 billion look like a rounding error. Supermicro, I saw somebody asking, when's it going to be added to the S&P 500? Okay, the second that it is announced, it's not officially added, right? But the second that it's announced, that's it. It trades as if it's in the S&P 500. That is the way it works. It's the way it's historically worked. Literally, the second after it's announced, okay, the trading firms start going after it for statistical arbitrage, which is just part of the S&P 500, which is, again, important. By the way, we are seeing some movement in terms of implied volatility. This is interesting because, there's not a lot of quote unquote bearish things going on in your screen, but that is a significant move. 1425 to 1440, and that's actually a big boy move. It's a big boy move because you expect these vol futures to be down quite a bit. And the reason you would expect them to be down, yesterday turned into a little bit of a crap fest. Yes, we rallied up, but take a look at like some of the volatility contracts yesterday. Okay, that thing overshot. It pulled back a little bit, but still the crap kind of hit the fan. Look at volatility today. All right, you can look at VIX. You can see volatility through and through. It's got a bid back under it. So there is definitely a hint of a risk in the air. Frankly, again, I'm a little bit surprised. From where I stand, I figured if markets are going to back off today, it would be done on the back of like the JOLTS number or wholesale inventories. But I'd be keeping an eye on this. Also, the contract size in here, it's rather heavy this morning. So there's trades going on here, people. And a lot of them. There's a lot of contract size moving through, which makes sense. I mean, you're having a decent size move. Let's go look at a few of the other tech stocks here. Tesla, okay, there is just no love inside of Tesla anymore. Moreover, Apple, right down to 170. What I was concerned about for today's trading is that you already have Nvidia to the upside by 20 bucks at this point. So Nvidia is to the upside. What I was concerned about today, and I want to make sure that everybody understands. So we talk about like risk reward, and sure, this marketplace can back off, but what concerns me today, what if Apple and Microsoft and Google, those three, have been tagged hard in the last few sessions? I mean, Apple specifically, but and you're looking obviously at Apple, and that's what I mean by tagged hard. What if these three got a bid back under them? This marketplace, it explodes back to the upside. So there's a lot of times where I'll sit here and be like, no, there's risk to the downside. And there's no question that today, okay, there's no question today, we could absolutely revert back down. We do it on the back of Nvidia though. And again, Nvidia has played no role whatsoever in any sell side activity. It's at highs, new highs, all-time highs, whatever highs you want to call it. Okay. Consequently, so is Meta. Meta's right there up to the highs. In fact, if you look at the auto expected moves, it's now officially unchanged in the week. You cannot say that, okay, for an Apple. This thing is so oversold, okay? That's what makes me nervous about today's trading session, right? Not often do I say like, oh, I'm very nervous to the upside. Like there's always the opportunity for markets to rally, okay? But today, there's market, there's opportunity for the markets to explode into new highs. Speaking of new highs, meanwhile, the financials have come in considerably this morning. It's a dicey day. So we have a couple of catalysts out there today. 80 has come in. We have a couple of catalysts out there today, and I just want to bring them into scope. Okay. First and foremost, a lot of people, okay, that trade are definitely concerned about Jerome Powell. He is testifying, okay, today, the House Finance, yada, 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 who the hell cares? But what most people are not aware of is that a Jerome Powell prefabbed speech, basically everything that Jerome Powell, his opening remarks for the committee, it was already released. Okay, so I want to make that clear that whatever you think about the Jerome Powell testimony, that's fine. Okay, but he already released the comments, and that is always done before. Now, you are going to get, okay, our Congress peoples that are going to be questioning him, predominantly probably about U.S. debt. So they're going to kind of question him on behalf of the Treasury and say, why you got to keep rates so damn high? That's what they're going to say, because of course, Treasury debt grows as they keep rates higher. He controls obviously the cost of borrowing. With that being stated, I don't necessarily think we see too many fireworks during the Jerome Powell testimony. So on that particular front, next, okay, the next announcement, and to me, the one that really matters. Yeah, no, it's not Bank of Canada. Bank of Canada, the loony. Anyway, what really is going to make a difference right here, JOLTS, wholesale inventories. Okay, JOLTS. This one has moved markets substantially as of late. It's a ridiculous thing to move markets on, but it has, okay, moved markets. It has moved markets. Wholesale inventory can move markets. And just for me to quantify, when I say move markets, let's be very, very specific, okay? Specific to the point, the S&Ps have moved basically $30. They're on, as I was saying earlier, they're on their daily expected move, okay? Meanwhile, look how much volatility is still packed into that little monkey right there. So you have to understand that last night, the expected move, so this is from last night, the expected move last night is plus or minus $31. The market moves $31 and we're still actually packing in another 25. That's a lot. It's a lot. They're putting a heavy a heavy risk into the wholesale inventories. I mean, yeah, some of the Jerome Powell crap in there. By the way, Bank of Canada was massively unchanged. It was 5% and 5%. They're not going to do anything. Okay, I get Jerome Powell on the phone. What are you going to do? Like, I don't even know what I'm going to do. Like, then we don't know what we're going to do. We'll do nothing. Sorry, that was my rendition of the Bank of Canada calling Jerome Powell. The next showing will be in 30 minutes. Anyway, you have to kind of sit here and wait this first announcement out. It's not going to be easy. Okay. All right. So I continue to watch Nvidia. All right. Now, Nvidia, here's one where even back here, I was labeling like risk reward is just horrific in here. And we've exploded from there. Okay. I suggest to you this, it's going to not just end badly, it's going to end badly for the markets. Okay. So a few moments ago, I'm talking about risk to the upside because I say that there's incredible risk to the upside today. Okay. That in no uncertain terms, that doesn't mean that, look, if Nvidia comes down, everything is coming with it. What could be in the cards, though, is you see a movement out of Nvidia back to Apple, out of Nvidia back into Google. The only way that this marketplace, though, remains stable to some degree would be a cyclical rotation, a rotation literally out of the big player, okay, and into the, well, stocks that have had the crap beaten out of them. It's the only way it will be stabilized. I don't know if that can happen. I don't know if it can happen because, look, Nvidia is not just in nosebleed territory, right? We're marking time, and we're not even marking time in days anymore. We're kind of marking time in hours here of when we're going to see what. I can't tell you it's going to be the demise of Nvidia. Okay, we are going to see a short-term pullback in this product that is going to scare the living crap, okay, out of some of the most experienced traders. And I looked for it all last week. There were threats of it last week. Okay, in fact, if you take a look at the expected moves, when I say threats of it, there are several times last week where we did this dip and rip. We dipped, mellowed out, totally flat. Okay, the ranges last week, though, very, very odd. This week, it's back on the bid to the upside. Nevertheless, okay, Nvidia is just the key player. You know, yesterday, I think you have to put a little credit where credit is due yesterday. You know, you have to recognize that Nvidia held the market together yesterday. The S&Ps at one point were down over 70 handles, and Nvidia at that point was down like $3, basically not even participating in some of the sell side activity. Okay. And lo and behold, that does not bode well, though, for the broader marketplace. Okay. Because you have this key product, okay, that's holding things together right now that we're telling you is, you know, I'll say it in the nicest way, it's kind of marked for death. Yeah, Steven Seagal, you wanted to work into Steven Seagal movie? Yes, I did. No, this one is definitely, it's a this is you know, a marked product at this point. You don't like to see a stock going parabolic like this with, check this out, IV ranks continue to climb. So does it mean it tanks today? No. Okay. But you're going to get the absolute crap scared out of you several times in here. And the reason I'm mentioning Nvidia has nothing to do with Nvidia. Okay. Skin in the game Nvidia is fine. Okay. It's the S&Ps, though, that are going to be the recipient of the pain there. Speaking of recipient of the pain, the S&Ps, can you say that they've backed off? No, not really. When we started this today, they were up basically 30 points. Whatever, they're up 26. You do realize volatility continues to climb. So if there is one pretty significant bearish undertone of this marketplace, volatility sees something this morning. And maybe it sees the fact that, you know, major sectors flat. Apple is its own sector. It's actually starting to get smashed again. By the way, Apple crossing through the 170. Okay. This is another big boy move in here. Okay. Barry, be nice to the Canadians. Barry, okay. Since when am I nice to anybody? I mean, where's the fun in that? Where is the fun in that? I love Canada. I may have to move up there for a while. Okay. Will you take me? All right. At this point, I'm about ready to get out of the I'm driving around here in Arizona now for like 3 days, and I'm like, oh, get me out of here. You know, the irony is it's all Canadians driving around here. Scottsdale. I wish I were joking about that. I saw some like newspaper article. My mom sent me a newspaper article because I always complain about the drivers here, that Phoenix was actually rated the worst drivers in the United States. Okay. I would corroborate that. It was the worst drivers in the United States in Phoenix, Arizona. Okay. Congratulations. It's good stuff. All right. We're going to look at some individual stocks. Obviously, we're going to have some news breaking over here, but volatility continues to kind of climb in the backdrop. Interestingly enough, the bonds are really starting to rock to the upside. Okay. So, before I go into that, there's also there's going to be a Wednesday chat today. The Wednesday chat is none other than Blake and Gianni. It's bonds, bullion, and Bitcoin. I want to bring something up for a moment that is a definite standout. And I believe that Blake and Gianni may have snowbirds. Are we allowed to call them that? All right. Anyway, Blake and Gianni may obviously are going to further this conversation. There's a huge bid back in bonds. Okay. The question is this defensive, or did the bonds just sell off too much? Okay. Or it's defensive. So when I say defensive, when you're buying bonds, you're going on the defense. It could be capital rotating from Apple, from Google into products like bonds. But if you look right now at what are categorically speaking defensive products, bonds historically have been defensive. They haven't been though. Okay. Gold. Okay. Unequivocally, people go to gold in times of uncertainty. Okay. And then we have the Bitcoin. We don't know what the hell the Bitcoin happens to be. Nevertheless, okay, I do find it interesting, okay, very interesting that all of these products, okay, are breaking to the upside in a big, meaningful way. My concern in here is, obviously a concern of gold. Gold is at all-time highs. So you can bring up the forever chart in here. The forever chart. Look at that. That's awesome. Okay. 50 some odd years in here. It is. It's 50 years. Okay. 50 years of a chart. Yeah, right. Like 48, 49 years, but it does it. It does it for me. Anyway, gold is actually in the last 4 days ripped to the upside. Okay. Bonds, similar. Okay. Look at Bitcoin. Very, very similar. Now, okay. I am not going to go out on a limb here and start stating what I think about it. Doesn't matter what my opinion is. Okay. Assets are definitely rotating right now. Pay attention. Assets are definitely rotating. And there's no question. Okay. It's got something to do with the Apples. Okay. It's got something to do with big tech. Tesla right now breaking apart. Tesla, in fact, not only about to break lows, but this is a pretty significant one in here. This is a straight shot almost down to probably like 150. Okay. But we have Tesla is not doing well. There is a capital rotation, okay, going on, and it almost feels like there's just not enough asset classes to go around. So we're seeing a movement to bonds. We're seeing a movement to gold. We are seeing movement into crypto. Some of the crypto numbers are astronomical. Some of the smaller coins, they're up like 1,000%, like in the last week. Literally, they're up like 1,000%, and it feels like a couple of years ago all over again. Meanwhile, at the exact same time, you're seeing a rotation that continues to come into Nvidia. So there's this massive capital rotation. Now, that's all I can tell you at this point. I can't tell you what it's going to look like, a day or a week from now. I can tell you that, the Nasdaq right now, it's all kinds of sketchy. Okay. The last few trading sessions have actually, volatility is really starting to open up in here. And when we start talking about volatility, you can look at like VXN to your blue in the face here. Let's go look at VXN. VXN is like the VIX for the Nasdaq. It's a little bit bid. That's not what I'm looking at. What I'm looking at is some of the intraday volatility. That crap is picking up in a big and meaningful way. So look, there are many, many signs of significant capital movement. I can't tell you though. What I can't tell you is maybe we're going to flush out of the bonds back into the Nasdaq here. Okay. But there is defensive posturing going on. Frankly, I don't know if Bitcoin is defensive posturing. I can tell you that gold though, and this bond market looks defensive in nature. Okay. There's just not a lot of capital though moving yet. like the size of the trade in here. By the way, the size over here is because of the roll. So forget that crap. Good size inside of this product is somewhere in this neighborhood. And yesterday it traded good size. Today is going to be fairly critical as well. As I said to you this morning, as the bell went off this morning, I was saying there's like what I would term catastrophically large movement and volume inside of the bonds. I shouldn't say movement. The volume in the bonds this morning, I've already done 200,000 contracts. So there's huge size trading in there. Nevertheless, okay, there is defensive posturing that I believe is underway in markets. That could have been exclusively from an Apple, okay, from Microsoft. By the way, Microsoft, okay, I don't want to say it's unscathed. It's really not. It's just a stone's throw off, basically its all-time high in here, okay. Its implied volatility though as well yesterday, picking up with the market selling off over here. Year to date, some real damage was inflicted. This thing was up 13%. Okay, it's only up 8% right now. But the capital from these products, Apple now is down 8% a year-to-date basis. The capital from these products, okay, it hasn't impeded upon the broader market because everything that's flowing out of these products, okay, is flowing, okay, into like an Nvidia, into a Meta. So it's like a selective rotation. Some of the capital is clearly moving towards the bonds, clearly moving towards Bitcoin and gold. And again, Bitcoin, I don't want to say is a defensive product. I just think it's a rotation at this point. Okay, so we're coming into the first major announcement, really the only major announcement in my mind this morning. And markets are kind of backing off over here. Now to be careful in here because this could be a little bit of shock and awe. There's a lot of volatility that's packed into what is this JOLTS number. Cannot reiterate this enough. There's a reason we're still sitting at a 25, point expected move, even 30 minutes into a trading day when we've already moved 25 points. So this is fairly significant. You may not see the full move, okay, instantaneously, but there could be a shock and you're going to see volume disappear right now entirely. So in the S&Ps, everybody's going to go away and hide until the announcement comes out. So that is algorithmic trading at its best. Speaking of that, look at this. There's real selling going on now inside of Tesla once again, all right? It's starting to open up in Microsoft. So I would assume Apple has just had the crap beaten out of it already. There's the alarm. But there's real selling starting to bleed through inside of Microsoft. Okay, but none of it matters until this announcement actually comes out. Google as well. Google, the last couple of trading sessions, by the way, year-to-date percentage, you believe this crap? You believe that the Nasdaq is up 9%, okay? With Microsoft is still up on the year. Apple, okay, is down 8%. Google is down 4.5%. Tesla, okay, off by 30% in the year. Could you believe that the market, if somebody told you that even 6 months ago, you would never have believed that the Nasdaq could actually be up on the year, nor would you believe that the S&Ps could be up on the year. Ironically, once again, people, we're at 5111. So let's get ready to rumble here because this marketplace is going to move the next couple of seconds. Not because anybody cares about JOLTS, it's just a number to trade on. And it's off to the races here. So some decent size movement in the front of the Nasdaq right now. So Nasdaq is, and again, the first move in here, it doesn't mean anything. Doesn't mean anything, but Microsoft really starting to pick up some steam. We're still trading literally at that 5111, and the volume in here, give it time, people. By the way, if you're kind of curious what the JOLTS are, they came out like almost as expected. Wholesale inventories. Well, that's interesting. The wholesale inventories here, okay, are they're way off. Wholesale inventories are not good. Way off. Minus 1.7 expected 0.5. It's a huge miss inside of wholesale inventories. That should rock bond markets to the upside, I would think. All right, well, we'll see how this plays out in the next few minutes. Okay, we're just trying to get through what are some big catalysts in the marketplace Now, that one didn't exactly disappoint. We're unchanged, but the amount of volume in there. But take a look at the bond market. Bond market, okay, sold off, already recovered in here. Well, now it's out. Now we're ready to actually get trend worthy on this trading session. As I was saying, there is some pretty good sized price action inside of Microsoft, okay, with volume starting to really pick up in here as well. That's going to be something to watch. And the reason I say it is, look, Apple, for all intents and purpose, it's already had the crap beaten out of it. I think you could probably make a similar argument, although 130 may hold some big weight inside of Google. Okay. Microsoft, I just said this a few minutes ago, Microsoft is still, for the most part, in my book, unscathed. Microsoft loses the 400 level, though, and things get very, very interesting in a hurry. There's just, if Microsoft falls, there's no way the S&Ps can hold it together today. So, all right, let's go look at our positions in accordance to some of the price action we're seeing on the screen. Just looking at this. Yeah, you know, there's bad numbers coming out. There's good numbers. I have to tell you, even the earnings lately, in fact, we're going to look at some individual stocks, then I'll look at positions. Even earnings lately, it's all over the place, man. It's all over the place. There's one thing, though, that is very cut and dry, and that's this. Good news, you're moving 3 deviations above your expected move. Bad news, you sell off, but not that bad. We'll look at that in just a moment. I don't know if you guys have noticed that, though. Like good news, like CrowdStrike today. We're going to look at CrowdStrike in a second. CrowdStrike, buy it! Okay. Bad news, like JW Nordstrom's. It moved down, but only to the edge of the expected. You know what? I'm surprised. I'm surprised we're holding together as well. Like, look at the volume that's coming through in the S&Ps. There's no question. The JOLTS number, everybody was waiting for that number in wholesale inventories. The volume states just that. I said there'd be no volume right before it, and all of a sudden it bursts. But this kind of volume is going to move this market. We're not going to be trading, 51.11 here in a few minutes. There is heavy size coming through this marketplace. There is more sell side activity exclusive into Microsoft. It continues to see selling. Microsoft is going to test the 400 level, and it is going to bring the S&Ps down with it. So S&Ps, I'd say, are open to the 5100 level. I want to make that clear. S&Ps right now are open. When I say that they're open to 5100 level, expect them to actually test right into 5100 here in the next few minutes, with Microsoft likely to test. And here it is. It's going to test into it. You know what's insane, though, about this is they're still propping, this little monkey up. It's still holding it together. It's up 2%. Nvidia still holds this product. I mean, it's in the whole market. Okay. Look at the advanced decline line versus where it was starting to come in a little bit. I'm surprised it's not coming in more. Yeah, here come the financials, seeing some selling too. You'll also note today, I'm not looking at ticks much. I see them on another screen. They're not moving. Okay, here we are. 5100 is, as I said, is open as we test, okay, right into 400. There's the 400 print, okay. Here's the 400 print, and here's our 5100 print. So I do hope that somebody is kind of scalping this. Damn, that is some size trading in here, okay. We are really starting to see some, that is a glorious amount of contract size that just traded through. Almost 15,000 contracts in 1 minute is of a, not just significance, but yeah, that's getting it done. So how ironic, look at this. 408 cents and bounces a little bit, but I think we're going to see some selling coming in here. Let's cruise over to Nvidia for just a second, and we're going to go look at some individual products that are news driven. The reason I'm going to Nvidia, something does not look right in here in the last couple of moments, right? Last few minutes, I am seeing what is some fast, okay, very disconnected trade. The product itself, okay, you're going to watch this for a second, and you're going to see exactly what I'm seeing. Product itself is jumping in 50 cents and even dollar increments. Okay. We are seeing extraordinarily fast trade inside of Nvidia right now. Even for Nvidia, when I say fast, it's moving. The product itself is moving in dollar increments in certain cases. You know, it was trading 13, it was 14, it was 13, it was 12. Okay. There is huge size trading through here. Check this out. The number of puts is starting to pick up. Okay. That's puts traded at the ask or above. There is a lot of bearish activity right now playing out inside of Nvidia. Whether it's enough to substantiate a more significant down move is yet to be seen, but we are slipping fast. Nvidia just gave up the gains of the S&Ps on the day. That's your mover right now. The whole entire S&P was just, you know, resting on the back. Okay. In the last 3 minutes, it came down. S&P's right with it. I mean, that huge move was all predicated on Nvidia. So my question though right now, is this number going to continue to grow? Because if it does, that Nvidia is calming down right now. Okay, at least for the time being. It's calmed down a little bit, but there's still a lot of activity in here. We'll keep a good eye on this. Okay. So Jeffrey was saying, can you explain the sizzle on Nvidia? Okay. So what sizzle means, yeah, I probably know this better than anybody because I wrote the not the wireframes, but the requirements for it. What sizzle means, it's today's option volume versus the previous 5 days. Okay, so it's like today's volume, which is the volume would be here, right? 455,000 versus the previous 5 days at this point in the day. So it's time sensitive, but it only updates like against time. Like it's like every 10 to 15 minutes. I don't know what it is right now because again, obviously I don't see the code. You know, we had a like a version of Thinkorswim that you could actually look at, you know, what's the code behind it, but in any regard. So what you're looking at when it says it's 3.3, it's trading 3 times the volume, okay, versus its previous 5 days at this point in the day, you know, or every 15 minutes, though, it'll update this. And these look like they're updating a little bit, but it's not great. It's not great like against time. So it's trading some pretty serious size, okay? What I've been looking at though lately, and you can see Nvidia stabilized. As I said, it calmed down and stabilized once again. And that thing took off to the downside. It was up like 20 something bucks. And next thing it was up like 11. It's moving though really erratically for a few minutes. What I noticed though wasn't just the erratic movement, the number of puts traded at the ask or above. And again, I always like to explain it in a marketplace like this. You have an option of 11.10, okay, at 11.30. Okay, let's say that this market is on puts. Obviously, this is your bid, okay, and this is your ask. When you're looking at like puts and they say trade at the ask or above, they're just coming in there and saying, I'll take it. I'll take them. I'll take everything you got at 11.30. And this number starts to grow. And that is a very simple implication. You're buying puts at whatever price somebody wants them, okay, which is going to cause markets to sell off, okay? And you're seeing it grow a little bit right now. So that's, you know, again, it's been all about calls lately. We just buy calls and it drives the stock higher. But how does driving puts, like, I think some of you probably understand this, but let's actually take you through the tactics of it because it's worthwhile, okay? If either you, okay, a prop firm, all right, or a hedge fund, okay, any of you, what do? You buy puts. In buying puts, okay, when you buy puts, what you are doing by buying puts is you're buying, all right, you're buying a negative delta. When you're buying puts, it implies, let's say on an intraday basis, that you want the market to go down. Now, there's a counterparty to your trade. The counterparty is completely separate them. Oh, yeah. Okay. The counterparty to the trade, okay, would be the market maker. Market maker's counterparty. By the way, some market makers are also hedge funds, but there's a line in the sand in there. In any regard, when they go out, they have to do what? You buy puts. What are they doing? They're selling you those puts. They sell you the puts, okay? And that then implies what? Positive delta to them. The second that they're positive delta, okay, they have already hedged the position off. Okay, positive delta basically means they're long. They don't want to be long. In fact, most of them have to be what we term bona fide hedgers. Okay, fide hedgers, which basically implies that they need to be delta neutral. So they go out and they need negative delta. Where do they find negative delta? Okay, by selling stock. Now, some of you think you can't sell the stock. Certain stocks are hard to borrow. Okay, hard to borrow does not, okay, imply anything in the market making world. There is no hard to borrow in the market making world. None. This is why when people talk about easy to borrow and hard to borrow and short squeezes and, okay, a lot of it, they're full of beep, because on the market making side of the business, you can sell as much stock as you want. You're not even shorting it. You're just selling it. You're selling it to open, which are like, well, that's called, selling short. So this position here goes off at exactly the same time as this position. Okay. There's not even, microseconds. It's nanoseconds. It's billionths of a second. And sometimes they're even trading stock out of their own inventories. So when the market then moves, and by the way, there's a rotation going on right now. They're rotating back towards financials. Okay. They're rotating back towards financials, but that marketplace, that is one dicey number. I don't want to sit here and scream to you that's about to sell off, but okay, Nvidia is barely holding it together right now. So it's up $13 and you're like, oh, how do you know it's barely holding it together? Okay, this thing is all over the place right now. It was just up. Okay, take a look at the price action. Again, people look at charts. It's barely holding it together because it's at lows of the trading session. If it actually breaks through somewhere right here, okay, it's a little bit of a free for all. Notice the volume is gone right now too. Really very, very obscure, very fast disconnected trade in here. It's dangerous. Okay, everything across the board. Oh, boy, did we call Microsoft here. There's nothing left to, what do they say? Squeeze the blood out of a turnip. This thing is, it's as bloody as it can be already. So they're not going to squeeze Apple too much anymore. But here comes Microsoft. Okay, we might be seeing like the systematic sell side activity. I would have anticipated this would have happened, okay, much faster and all as one. It's not. Okay, it's amazing though. It really is amazing where the S&Ps are with the kind of selling we're seeing going on in here. Okay, that's real selling today. To the tune of 1% is not what I care about. Like I'm not talking about, oh, Microsoft's getting killed today. No, it's not. It's down 1%. What I am referencing though is look at it from an expected move point of view. Statistically, like, damn, he's got a point. You're almost at 2 sigmas. You're almost at a 2 standard deviation move. Okay, Microsoft, this is not like, little potatoes in here. Microsoft is the biggest player. Everybody forgets that because Nvidia, but you're looking at your, you just lost 3 trillion in market cap. I say lost it, you lost the level of 3 trillion. Apple's already down 2.6 trillion, the craziest freaking thing ever. You realize Nvidia is almost neck and neck with Apple, but Nvidia, okay, has over double the implied volatility. It's why I keep saying, like, I don't think people understand the significance of an Nvidia in this environment. By the way, Nvidia, the volume dissipated and then it came back up. You could very well see Nvidia become, second largest, if not the largest, in a few days' time. The market cap differential between Nvidia and Apple, this graph is not just closed the gap. Look at it. It's 2.6 trillion, okay, versus Nvidia, 2.2 trillion. They just closed the gap substantially in the last 2 days. Okay, what's not to say you could be talking about Apple, right? Rise and fall. And they don't have anything new. They don't have anything good. There's nothing new and good. Anyway, Nasdaq, a little bit of a bounce right here, but The bounce inside of the S&Ps is brought to you by the financials. Okay. And I continue to make the argument, if they're buying financials after this, okay, you know that capital seems desperate to me. That's something that Jeff Bierman's talked about a lot. It is. It feels desperate. Okay. Tim was asking, how do the new trade settlements? So trade settlements are, I'm just going to say this in the nicest possible way. The idea of T+3 is absolutely archaic. It is asinine. The fact that it's 2023 and we're still talking about T+3, okay, is ridiculous. So we're talking about settlements. It means nothing. If your brokerage firm, okay, can't clear your trades and free up your capital like instantly, all right, you just move your brokerage firm. It has no bearing whatsoever. You know, a lot of people don't understand that like T+3 comes all the way back from like, you know, the 1960s and crap, where they were stuck in the in that too much paper. There were periods of time where markets, literally, in the New York Stock Exchange, was having to close because they were backlogged on clearing trades. They had to close the freaking exchange. Okay, that's why they needed T+3. They needed a little extra time. Now today, don't worry about it, because you ask, why would there ever be T+3? It's so most of the brokerage firms can actually hold on to shares and capital. I mean, have people looked at like an ACAT transfer lately? ACAT transfers when you move from one brokerage firm to the other. You move cash and securities. You ever wonder why sometimes your crap just disappears for 4 or 5 days? They get interest on that. They get interest on your money that sits in there. Okay, I do not like that side of the industry, because you know, you think your credit card companies are sleazy where they take, you know, like 2 and 3%. Okay, that's nothing. The brokerage firms are intentionally slow. They go, oh, it was an ACAT transfer? I had no idea. they had to they had to put rules in there that you have to respond within like 24 hours, because the firms be like, I know ACAT transfer. I have no idea what you're talking about. Okay, those are not the droids you're looking for. I hate that side of the business. Okay, the evil side of the brokerage business is being intentionally slow, and it's usually, we term like the bigger wirehouses. Okay, there's probably some of you that even work for the big wirehouses. I know that a couple of our clients worked at Morgan Stanley. A few of our clients actually did work for Goldman Sachs. Okay, the old school name for that is the wirehouses, and many of them, if they worked in ops, they would know this. But that's the cool thing is, you know, I got to see, not so much at Think or Swim, but by the time we were at TD Ameritrade, you know, and you're at a certain level above, you get to see everything. You get to see everything in the entire firm. It's actually quite cool, because you get to see like the fights going on between like TD Ameritrade and like a Morgan Stanley, you know, or TD Ameritrade and Goldman Sachs. You're like, we put in to transfer this client's securities, and it's been 2 weeks and you haven't done anything. That kind of stuff. All right. Anyway, I'm gonna calm down on that one. Okay, you're living in the 60s, man. I'm gonna calm down. That's the stuff that right there. You know, I don't ever want to go back into the licensed side of the brokerage world. I hate it. I hate it for reasons of like just that. Okay, let's keep technology extremely slow so that we get to keep their money longer than they get to keep their money. And they have to say it's slow like that. It makes me think of what the hell's the movie where you go to the DMV and it's a sloth? Oh, it's where the animals run and everything. I love that scene. Okay. He goes to the DMV and a sloth is actually running the DMV, like behind the counter. Okay. Zootopia. It's Zootopia. That's what Goldman Sachs is on the retail side. It's Zootopia. I got it. All right. Oh, there you go. Somebody said I did that at Smith Barney. Oh, damn. I haven't heard that name forever. Okay. Smith Barney. Oh, I seriously haven't heard that name forever. Okay. Zootopia. I got it, man. I got it. All right. Back to it. That was one of my favorite scenes. So I watch a lot of the, I used to. My kids don't even want to watch the children's movies anymore. My youngest is like 9 now. You know, he was watching the other day. He watched for the first time Beverly Hills Cop. It's R-rated, but it's like 1980s R-rated. Okay. And then, you know, I haven't seen that movie in probably like 15 years. And then, of course, I'm like, uh-oh, And my wife's like, what? I go, there's a scene in a strip club coming up. Like, she's like, it's too late now. You started him on it. He understands more than I thought. He's 9. It's the youngest. Okay. We're going to mess him up good and early. I was the youngest. Can you tell? That's what happens to like the third child. Okay. Or what I call the copy of the copy. Now, that one I stole from Multiplicity. I love that movie too. Michael Keaton, very underrated. Okay, let's back over to Nvidia, which is actually recouping some of the losses that it took, and it's stabilizing the Nasdaq right now. Hold on, hold everything. Yeah, the 1980s is the good time. It's the good time. Oh, come on. I know somebody's going to send me an email now. I cannot believe you let your 9-year-old watch Beverly Hills Cop. It was educational. He learned that drugs are stored in coffee grinds, what a strip club is. Okay. There's shotguns and stuff. It's everything that every 9-year-old needs to understand. He'll be better in the world for it. Okay. Can't wait for that email to come in. CrowdStrike. Sorry. Yeah. Yeah. R from the 80s is different. Okay. It's a wholesome 80. Yeah. I like what RJ said. By the time you get to the youngest, you're tired and they say, screw it. That is true. What it really comes down to is I just want to watch a real movie and not like Zootopia, although I do find Zootopia absolutely hysterical. Okay. I just, at that point, I don't care. So CrowdStrike, the reason I'm actually bringing CrowdStrike up is to make a very, very simple point. Okay. And it's kind of an interesting trade that could be done in here. So CrowdStrike was already positioned to move, almost $40. Actual move right now is 48. Interestingly enough, it looks like it's pulling back to its expected move. But the point that I'm trying to make is a very simple one. I think JD also was exploding to the upside here. There you go. Look at JD. And this is an ADR, but neither here nor there. It had like a nothing expected move, and it's up almost double. One of the things I've noticed, especially in tech stocks, if they say anything decent, it's moving 2, maybe 3 deviations to the upside. Okay. Negative news, though, it's just the lower edge. Okay. Speaking of lower edge, look at stuff like Foot Locker. Okay. Foot Locker is right now, well, let's start with this. Foot Locker was positioned to move just about $6. Okay. It did just, it just basically came into the expected move. It was trading 34 and change. Okay. It's now getting completely decimated. But the interesting thing is this is during trading hours. Clearly, there was a conference call this morning. It didn't go well. It's getting completely annihilated. Foot Locker, than you expect, starts to have implications back to products like Nike. Okay. And that's what they sell. Nike is still up. Then I look at stuff like brands, specific brands like Lululemon, flat on the day, not being impeded by the Foot Locker debacle over here. Okay. I look at stuff like Dick's Sporting Goods. Okay. Dick's Sporting Goods, you can't even believe this thing. It basically explodes to like 190. It's having a pullback right now. It's still up, okay, 1.5%. But time out for a second. The point that I am trying to make, okay, we have today, I haven't even gotten to the second one, okay, several retailers, including Foot Locker. Now, let's be honest, Foot Locker, okay, this thing has been in its way out for a long time. This may be the final nail in the coffin, but you also have JW Nordstrom's, okay? So why am I was bringing up like, Dick's Sporting Goods, I was bringing up like Nike, okay, Lulu, not having any impact, okay? This does not bode well for the retail world. Okay, JW, Foot Locker in the same day. Hold on, I'm not done yet. Okay, throw a little bit of like Ross Stores in there. Look at this. It's actually rebounded off of it. Okay, there is a very clouded picture right now of retail. Very, very clouded. Okay, it is to me, of the greatest concern. I'm watching retail, okay, probably more than I ever have. Now, Jeff Bierman watches retail because he was like a retail analyst for a while. It was actually Bierman that originally, 15 years ago, got me looking at retail. But pay really careful attention to this right now. Okay. There are things going on inside of the retail world that almost like defy logic, where one product is like practically out of business. Obviously, if you haven't seen Macy's lately, they were done for until they're going to get bought. That's it. There is a buyout deal on the table in here. The picture in here is incredibly clouded. Okay. But it appears that there are many retailers, okay, that are either unimpeded, like for instance, Target continues to explode higher. I just gonna tell you right now, the market, in my opinion, is just not paying attention. Okay. The revenue numbers in here were terrible. They were the first time they actually were down on overall revenue, okay, in the last 7 years, right? So they're making less, but well, I shouldn't say that. They're making more money in Target, okay, on less overall revenue. It's a very funky story. Spending though, by in retail, by and large, does look like it's contracting right now. I think I'll leave more, Jeff Bierman to extrapolate more a little bit on that. But it's disconcerting when you see Foot Locker, JW Nordstrom take a hit in the same day. Ross Stores was down, actually rallied. I was looking at TJX even before the bell. TJX, okay, pretty critical reversal in the last couple of days. So we'll be watching a lot of, some of the ETFs and so forth. Okay. Meanwhile, you got consumer staples basically approaching there. Look, it's basically approaching almost the all-time high in consumer staples right now. Okay. This is a funky market. And I'm concerned about this because I don't think the consumer is actually there. All right. I think the consumer is like an empty shell. Tech would probably, feel it to some degree, but later. But then again, you're looking at tech, and obviously Apple heavily involved in retail sales for a big portion of their business. The phones are, okay. Stock's already getting decimated. I mean, and this is a big move for Apple, and make no two ways about it. Apple, okay, was up almost 6% year-to-date basis, is now down 9%. Okay, this is beyond corrective territory. Apple, you're a stone's throw off. In fact, you can even kind of quantify this yourself from the absolute high to the low. Damn it. From high to low, okay, you're off about 13% and change. You're not too far away from it's corrective territory, not exactly bear market territory. If you want, okay, for those of you that get this, you can actually go from some of the recent highs, okay, to low, and you're off 15%. So you're on your way here to like bear market status inside of Apple. So for those of you, if you're looking at markets and there's still people like it's bull market, your second largest market cap, okay, in the S&Ps is in the throes of almost a bear market right now. And I'm not here to try to bear up on you. I am here though to explain to you, okay, it's a tale of, well, basically not two worlds. There's one world, and it's Nvidia, okay, and it's dragging Meta along with it. But the marketplace is incredibly fragile. It's why I was bringing up a couple of retailers there, mentioning Apple for a few minutes. One of the things I am going to try to do as this day progresses, if we see some more sell side activity, okay, I want to just set up the rest of the day for you. And I just realized I have to turn over to Bierman in a few minutes. Okay, damn, I was thinking an hour is going to take forever today, but that went by very quickly. The first thing, if we start seeing any sell side activity today, the high probability we get drawn right back, okay, to the lower edge of expected move. I would give that as high as almost 50-50 shot today, getting pulled all the way back here. That is, okay, the amount of volatility. We're still seeing a lot of volatility. It's still $23 of price action packed into the S&Ps. Do not, okay, be at all surprised to see us. We're trading right now, what, 5,100 on the button, okay? Lower edge of expected move is about 28 handles lower from here. Okay, do not be surprised to see us get sucked right back to the lower edge of an expected move in today's trading session, right? Again, I give that as high as, when I say 50-50 shot, 50-50 shot should be us going up or down. 28-point move, okay, it's pretty significant. So obviously, I feel pretty strongly about this. In fact, okay, so strongly, today is March 6th. The lower edge of the expected move, is right here at about the 72, right? there's a trade you can actually take and put on. Just hold on a minute, Bierman. Hold on a minute, Bierman. He's getting excited. So I want to see what the butterfly costs for today. Like a butterfly, literally for today. It's 5-point wide butterfly. Let me just price. Okay, watch this. We go buy deep and wide. 1 month, 2 strike, butterfly. You're paying 70 bucks. If I could fill this at 70 bucks, that'd be pretty sweet. 70 bucks for a $10 wide fly. Let's see if it goes. Okay, so I'm actually working an order in here to buy a butterfly for today, thinking we may actually come down. I'll pay as much as $75 for this. Okay. There we go, filled. Okay, so I have a butterfly now sitting, okay, on a central strike of 50.70. Again, a 50.70, which is just a hair below this. Do I know that we're going to come down? No. I'm taking, okay, a 75 for 75 bucks. And I would only do a $10 wide in here. I wouldn't do the $5 wide. For 75 bucks, if we come down to expected move, this thing will easily expand out to be worth, I know it's a $10 wide fly. Okay. If we left it on right until the close, it could be worth 8, even 10 bucks, but it's easily worth, okay, about $4 if we came down there in the next few hours. Just to give you an idea, the way to price this, where are we trading right now? 5,100. Okay. We price the at the money butterfly right now, and you'll see the at the money butterfly, okay, is trading for $1.60. Take a couple of hours off of this, and the thing will expand out to $4. So all I'm doing is taking a shot, okay, for the lower edge of the expected move today, okay, for today. We'll see what actually plays out. And again, that option is 0 DTE, okay? It is 0 DTE unequivocally also, okay, with the trade that I just put on. It is an intraday trade. It does not have to be closed. This is a cash settlement product. Now you can close it. If we're trading 570, 3 hours from now, you could close it. Okay. I do not often take these types of trades, but as I said, it's a pretty good probability we pull back into that. And it's largely about Nvidia. And we'll see what plays out inside of Nvidia over here. Okay. If we rally back up, so be it. I have to tell you, the rally today, it is far less than I anticipated an hour ago. An hour ago, I was like, holy crap, we could be up like 100 again today. Clearly, though, there are some issues in play inside of products like Microsoft. Okay, Tesla's still taking a little bit of a hit. And I don't anticipate, though, these coming back. I think we're going to rotate back down and out of them. The financials are kind of holding us together a little bit. We'll see how it plays. Again, see how it plays. S&Ps are bidding right back up. Look, even if they're up 30, don't worry about it. Okay, coming back on the day, plausible. Still got 5.5 hours ahead of us. With that, good 5 hours ahead of us here. I like it. By the way, the SPX, for those of you not aware, this product is open 15 minutes after the close. So we could hit 50.70 15 minutes after the close, and at 4:15 you can still, well, 4:14 you could still technically close this trade. But if it's in range, you could let it expire. It's a cash settlement product. All right, Jeff Bierman's got to come on right now. Also want to remind everybody, bonds, bullion, and Bitcoin. Blake and Gianni are going to be at the close today, Wednesday, March 6th. Jeff Bierman's coming on right now. He's talking about the buck stops here. Factors driving the US dollar, part 2. Stay tuned. Professor Jeff Bierman's coming on right now.